conversation with the pioneer of technical analysis in India, only on ET Now.
You're watching the F&O Show right here on ET Now. Let's continue our coverage on the F&O Show. Get your strategies then. A quick disclaimer before we go ahead. Please be sure to consult with your individual financial advisors before you take any positions in the futures and options segment, because while you may make windfall gains, you can also land up in deep losses. Dr.C.K.NARAYAN is on the show. Talking about two other stocks, Dr. Narayan, while we come to your own stock strategies, two counters, Coal India and Reliance Industries. Today, we had Coal India pip over Reliance Industries in terms of overall market value to become the most valuable company. What is the call there on a Coal India as well as a Reliance Industry, which have actually been moving in completely diverse directions?
Yeah, Coal India has been on the shopping list of most of the larger players, and we see that over the last set of months, the stock has actually been moving out from weaker hands, which is retail, into the hands of the institutions. I think that's a process which is in progress, and I wouldn't really venture into it at the level of 400, mainly because I see an immediate overhead resistance somewhere in.
Dr. Narayan, yesterday we had Bata, which was a long call that you had given. Today, what's the stock strategy? I believe Infosys is something that you want to take a call on, and also an update on what one should do with the Bata.
Well, the scenario in Bata is that the stop has got triggered, so this, the story in Bata is over. As far as the new trade is concerned, Infosys, one is again trying to pick the bottom here. We had this share really falling down in a very sharp manner. It had a pattern at the top at about 2300 when it hit. It has almost completed the lower side requirements for a decline. And over today, in spite of the market being a little weak, we are actually finding a lot of short covering action happening in all the IT stocks. The leaders are up and running. So I would take a slightly hesitant position in this, not a very aggressive one. I would go long the 2600 call, which is trading at about 4 to 5 or maybe 6 rupees in that region, which is a very small outlay to have. I see two upside gaps on the candlestick charts. If the process of recovery were to sustain, then I think the stock. Okay, what I was saying is that since we are looking at a rally in the price of Infosys, and I see some upside price gaps which go right up to 2600. That is the reason for selecting the strike at 2600 with a very small outlay. And I think even if we were to trade up to about 2500 to 2550, we should probably see the price of the call going to double from where it is right now. So I think it's a very low risk, low outlay sort of strategy to buy the 2600 call.
All right, that's a call on Infosys, a long call there at 2600. Thanks, Dr. Narayan.